Hello students, today we will discuss a question that came in a previous year accounts exam held by the Assam Higher Secondary Education Council. So the question we have here is, briefly explain any three distinctions between journal and ledger. Here it is asked to make distinctions or distinguish or difference between a journal and a ledger. But before going to the distinctions, we will know or we will understand what is a journal and what is a ledger. So what is a journal? We say very simply, it is a book of original entry. So by definition, journal is a book of original entry where all business transactions are first recorded in chronological order using the rules of debit and credit. So what we do in a journal? Again, we record each and every transaction chronologically. So suppose on a date, but suppose on a particular date, on suppose 1st December, a certain amount of money has been invested in the business. Suppose rupees 50,000, with rupees 50,000 a business has been started. So that transaction at the very first will be recorded in the journal. Next, on the second day, on 2nd December, if there is a drawing of that amount, that will again recorded as on 2nd December on the journal entries. That will be recorded. Again, that will be recorded in a chronological order. So whenever any transaction happens in a business, that is immediately recorded in the journal. That is why we say it is a book of original entry. And what does a journal look like? A journal somehow looks like this. And in a journal, there will be a date column, particulars. This is the ledger folio column, the debit amount and a credit amount. So this is how a journal looks. Or we can say it is a format of a journal. So suppose on, as I said, the example on 1st December, a new business has been started. So what or new business with a cash of rupees 50,000 has been started. Then the journal we will enter it like this: the date 1st December, cash account debited, because again we will know it is prepared by following the rules of debit and credit to capital account. So this is an example, a very basic example of how a journal entries look. As for my as the example I gave, 50,000 invested. So 51 there in the debit column we will give with the cash account 50,000 rupees, and with the capital account in the credit column we will record the 50,000 rupees again. So this is how we do recording in a journal. So it is a book of original entry and the transactions are recorded in a chronological order. So this is the concept of a journal. Now we move to ledger. What is a ledger? So as I said, journal is a book of original entry. In that way, ledger is a book of secondary entry, where the transactions from the journal are classified and posted account-wise, showing the cumulative effect of each account. So after recording in the journal, the next step in the process of accounting is posting in the ledger or recording in the ledger account. And what is a ledger account? It is again, because there are numerous transactions happening in a business every day, that those transactions are classified under different account heads. So suppose every day, today there is a purchase of goods. The next day there will be a purchase of goods by the business. So where will we record how we will classify that purchases? We will create a purchase account and record all those purchases only or classify that purchases only in one account. And from where we take that information? From the journal entries. So what does a ledger do, or what do we do in the ledger? And the process we call is when we record the entries of journal entries, or we record the journal entries and we take information and we transfer it into the ledger account wise or ledger accounts. We call that posting, ledger posting. So that is why we call it a book of secondary entry, and we classify information in the ledger account. And the format of a ledger account looks something like this. So it will again have a date column, a particular column. Here we will have a journal folio column, debit amount. So this is the debit side. This will be the debit side of the ledger account, and this will be the credit side. So in the credit side also we will have the similar columns, date column, particular column, journal folio, and credit or the credit amount. So a ledger looks somehow like this, or we can say the format of a ledger is like of a T. We call it T account as well. So this is the format of a journal. Sorry, the format of a ledger account. So now we move to the three differences between the journal and a ledger. The difference here, the first basis we have is the nature of record. In journal, we call it a book of original entry where transactions are first recorded chronologically. In case of a ledger, it is a book of secondary entry where transactions are classified and posted account-wise. So here the basic difference is journal is a book of original entry, ledger is a book of secondary entry, and in journal we record the transactions chronologically. In ledger we classify them and post them account wise. The next distinction or the next basis of distinction is the purpose. Why is journal prepared? To record each transaction as it occurs with complete details including debit and credit. So in journaling or while preparing journal entries, each entry is recorded. Every little detail is recorded. So the purpose of recording or making journal entries is to record each transaction so that complete detail is being recorded in the books of account. The purpose of ledger account is to group transactions, as it is said, like classifying. So to group transactions under specific accounts to determine the balances. So that at the end of a year or at the end of a month we will have the balance of each account. Again, each account means grouping all the transactions made in the journal. Grouping them is known as ledger posting. So, and why do we group them? Group them to find the balance of each account. So this is the purpose of preparing ledger accounts. Next, the basis of distinction we have here is format. As I have already shown you the format of journal. Journal uses a journal format where columns for date, particulars, ledger folio, debit and credit exist. Whereas in case of a ledger, individual account format. So as I have shown you the format of a ledger, so every individual account will look something like that, but the heading will be different. In case of purchase account, it will be written purchase account. In case of machinery account, it will be written machinery account. So each kind of different transactions will be classified under the ledger account, and all the format here is individual account format with separate debit and credit sides for each account, or we can say the ledger looks somehow like a T account. The format will be like that of a T. So the T, that is the T letter in the alphabet. So these were the distinctions between a journal and a ledger.